Hi, everyone. Welcome to the Canadian Passive Investing Show. I'm your host, 𝗖𝗽𝗶 Benesocky, and I'm joined by my co-host, 𝗖𝗽𝗶 Biniaz. We have another great show for you today. Please like and subscribe as it helps us build our channel and allows us to keep bringing you great content and expert guest speakers. Our mission is to empower investors to earn passive income through real estate investing. So today we're joined by Dusten Hendrickson. A little bit about Dusten. He is a South Dakota-based real estate investor who, through his company, helps his clients invest passively using his creative strategies and his years worth of experience in the industry that started in 2003. We believe this interview with Dusten will bring great value to passive investors looking to scout the best operators to invest with. This show will also be great for active investors looking to learn more about strategies on how to scout the best markets to invest in. So welcome, Dusten. Thank you so much for being here.
Welcome, Dusten.
Thanks for having me. I appreciate it. Good to see you guys, August and 𝗖𝗽𝗶.
Absolutely.
Good to see you too.
𝗖𝗽𝗶, I think you were 10 years old when Dusten started his career in real estate. But Dusten, please start by telling us about your background and your start in real estate, please.
Okay, so I started by trying a couple of things out. I first went to mechanic school in Phoenix, and then I went to formal university in my home state of South Dakota. Neither one of them I really liked, so I started a roofing company, and I was an entrepreneur for a while, and I discovered I actually liked the inside of the house better than any part of the business of the roof. So I started building houses, and then I started building duplex as well. At the same time, I was like, well, I might as well just build a duplex because my mother was willing to invest. And basically, I was going to do the work. She was going to sign on. And that's basically how a lot of these get started, these real estate partnerships. And just worked my way up to learning about syndication. And then from my development of developing all this smaller stuff and the syndication knowledge, along with all the networking that I'd done through all these syndication groups, I was able to find partners, and we were able to scale to the 100+ unit development side, which is where we're at now.
Amazing. I guess your start in real estate private equity started with one investor being your mom. Same case with me. That was my start as well.
Nice.
Great. Yes.
Now I want to chat about Mailbox Money, your company. Mailbox Money is like this really exciting concept of receiving monthly cash flow. And it might be foreign to most people watching, but Dusten, how can someone receive money in their mailbox from investing in real estate without having to do any work?
Well, you guys basically promote the same thing, so they could either invest with you or with me. But we offer investments, that start on some of our syndication deals, $50,000 minimum. Some are $25,000, and we offer that with development or acquisition, depending on what your risk tolerance is. And then when you get involved in the syndication model, there's no liability or responsibility or anything other than your initial investment.
Great.
Exciting concept.
Yeah. So now the next question here, Dusten, for some of our viewers who might not fully understand how multifamily projects are structured, could you please take a few minutes to discuss few terms that are commonly used? For example, operator, sponsor, allocators, syndicators. It can get pretty complicated for passive investors pretty quick. Maybe we can discuss the difference between allocators, a group or someone who mainly deals with raising capital and bringing equity to multifamily deals, compared to operator, who usually manages a project, deals with debt, brings on equity, but also works with other allocators. So please discuss this topic.
So I would basically describe me as more of an allocator because I'm not as much in the day-to-day business. Once I invest in these projects, I help with some of the design, and I mainly bring in capital and get the thing started and structured first. So I'm more of an allocator, and then I partner with the operators. So operator, like you said, is someone that manages the property day to day, and they're a very, very important, just as important as your property manager. The property manager might actually be more important, but I don't know. The property manager is super important, but the asset manager and the operator is very, very important on a day-to-day basis. And I prefer to, there's a difference between I think the higher level they are, usually they're not the operator per se, you go.
Oop, we lost your camera there.
Oh, sorry.
Yeah.
You go to a higher level, and then, you know, you're not involved in as much of the day-to-day operations, you know, so you got to get a more detailed person to usually run the operations. You got to get a more communications person, a relationships-based person to do the allocation, and just all depends on what you want to do, but you need a good partner in each one of those. But like a sponsor, right? A sponsor could be an allocator or an operator. You know, there's some of these broad terms like syndication group. That's everyone falls underneath that. So that's a very broad term. Where a syndication is it just means you get a group of people together to do a project. So you've got, say, a computer dork, and then you've got the real estate guy, and then you got the numbers guy. I mean, you got all these different personalities.
People person.
Yeah. People person, computer, you know, you need every single aspect. I feel like you need a minimum of 3 people. You know, you need the high level real estate person, you need the really detailed real estate person, then you need a communicator that everyone loves, because then you're going to get all your off market deals and it's easier to raise capital. So
Exactly. And just to touch on this topic of allocators and sponsors and the relationship that exists between them, initially starting out, the plan for CPI was to be the operator. But since we're based in Canada and we deal with Canadian investors, and then we want to be able to invest in different markets of the US, and the markets change in the US, we soon realized that, hey, it might make more sense at this stage to go and seek and scout the best operators. And then the more and more time we spent in it, we realized that, hey, this is better for our investors, because we're cherry picking the best operators, best performing operators, best performing markets, because sometimes operators that are stuck in a certain market, they have asset managers, employees, contractors, they have to buy in that market to keep their employees occupied. But what happens is, in our situation, you know, it allows us to be more dynamic, and you know, at times the investors are confused that if there is an allocator involved, there is a kind of you know, another person involved in in a business, that there might be less profits to the investors, but the total GP profits are divided amongst the allocators and the GP. It doesn't cut out an extra slice from the pie.
Yeah, no, and right, because the allocation is already, you know, there's a slice cut out for the allocation. So whether the allocator brings in the capital or the operator, you know, some operators are okay at raising capital because they've done it for so long. But I've found that you're either good at raising money or good at operating. They're 2 different mindsets. And I actually don't like to shift between the 2. I like to stay operating when I'm operating, and I fight going back to raise money. So I've learned that when I do have a campaign for raising money, there's no more operating during that time. I just have to raise money. So I feel like they're 2 extremely different hats. And it's such a big mind shift for me that I don't even usually want to do it unless it's a long-term project.
100%.
So I do the communication level that you're going to get from an operator versus the allocation guy is going to communicate with you so much better if that's what you desire. The operator doesn't care about the customer that brought the money, and he cares about this thing performing top notch. So he doesn't care about your feelings. He just wants to make as much money as he can on this project. And whereas the allocation guy is more sensitive and communicates properly and all the stuff that an investor wants. And that's kind of how I've seen it work anyways.
Absolutely. Perfectly said.
Yeah, well said. That makes a lot of sense. Now, Dustin, maybe we could talk about how to find the right operator to partner with. I know we here at CPI, we've partnered with passive investing, which has been incredible. But what caught our eye about passive investing was their trajectory of their performance, and the education, you know, factor that they displayed to everybody was extremely important component of their company, which we fell in love with. But how do you go about finding the right operator to partner with?
Well, I just invest a little bit of money with them. I do a lot of research prior, and I get to know them, and I make sure they pass the meet you and I want to do business with you test. But then it all depends on when you put the money in, because there's a lot of things that you don't really know how they're going to handle until they actually do them. And then you can watch them in real time handle those things. And sometimes actually you'll watch someone that, you know, they don't know what they're doing, but they get a good return because of some, you know, they bought it in the right location. But during the process of handling an investment with them, you realize they don't really know what they're doing, and they kind of got lucky here. So then I can, you know, disregard that person and not bring anybody else's capital into them. So I like to try them with my own capital first. If I lose some of my own money, at least it's my decision. I don't want to bring someone else's money in and then lose it on my decision. I'd want, you know, them to make that decision. So Yeah, that's how I test them. No, I think that the best way is actually to invest with them, and then you really know.
Yeah, definitely. That's a great way to go about things. Now, in the research we did on you, we noticed you invest in multiple markets. Maybe you can talk to us about how you scout the best markets to invest in.
I actually follow basically on the heels of everyone that kind of sniffs out the markets, and then I go to them and I physically put myself in that market and I see if I actually like that market. Not me for me personally, but as a renter, I try to put myself in a tenant's shoes, and why is this market gonna be another up and coming market? Because I would rather find a market like a Boise. Like, how do you find those markets? Well, you gotta somehow see where the growth is gonna go, and are people gonna really like and respond to this area? What's the vibe? What's the energy? Is it really a positive area? All that kind of stuff feeds into whatever feeling I get about the area. Then I guess I start investing there. And sometimes I like an area and I'll start investing there, and then I realize I don't like something about it. So then I just
learn as you go.
And when you are seeking these new markets to invest in, are you solely investing with operators, or do you do your own deals as well in a new market?
I'll invest with only operators, but I might come onto the deal with them, but I'm usually a small percentage minority.
Got it.
I'm not afraid to go invest in a new market with an operator I know. I'm just afraid to invest with a new operator mainly.
Got it. And another question here for you, as far as asset managers and asset management, have you ever dealt with bringing on an asset manager for a property who kind of oversees the property manager, who's the conduit between the private equity firm and the actual operations of an asset?
No, usually the operator is also the asset manager. The lead operator assumes the asset management duties. I mean, maybe that changes if we scale up enough.
Got it.
All right.
But
okay.
Let's discuss cash flow and appreciation. It's two words that we love, obviously. But now, if a real estate investment provides both, that's incredible. But there always seems to be a balance that exists where there's great appreciation, potentially the cash flow is less, and where there is more cash flow, appreciation is less, right? So maybe you could talk to us about how you mitigate this and what your current strategy is, and do you look for cash flow or appreciation or both?
So I've always liked appreciation because your bang for your buck is big, but I also learned that you cannot have too many non-cash flowing deals going on at the same time.
Yeah.
So cash flowing deal is always safe. So I'm fine with low cash flow as long as it's in an appreciating area. I just never want to actually have to put money into a project every month to limp it along while it's appreciating. That doesn't ever work for me unless, a development's different. You can throw in one development deal and you've got all this other stuff. If that one fails, it's not as big of a deal because you've got all this other income. I mean, I'm not saying that any deal is going to fail, but if you have just a couple development deals and you have 20 other projects, it's not as big of a deal. The risk isn't there. But if you have 20 developments and 2 other cash flowing projects, the risk is just way higher. But I do like cash flow, but cash flow does not move the needle. I just want the cash flow. And that's what I've realized actually since coming to syndication, getting in all these deals. Some pay 5, some pay 7, some pay 10. I don't even care, honestly. What I care most about is when that thing flips. What's the money look at is when it flips. I only want enough. Yeah, I just want cash flow so I know the thing's profitable. I don't necessarily need that monthly payment. But my situation's different. I'm still in wealth accumulation stage. But in this market right now, stuff's flipping so fast, you don't need cash flow.
Got it.
That makes sense.
Definitely does make sense.
Yeah.
Now, another point here. I mean, your earlier comment where when you started in real estate investing, and your mom was your first investor, same as me. So I want to kind of discuss that topic as far as private equity and capital needed, and the relationship of cultivating and nurturing, your communication and relationship with investors. If you can kind of talk to us about that and how do you organize that?
Right. So I am not a good communicator to my investors. I'm basically only a good communicator when we're right in front of each other talking. So I have a partner, Daniel, that I bring into my projects, Daniel 𝗖𝗽𝗶𝘁. He's from Colombia, actually. And he was the one that handles all the relations because he's just patient and like he likes to explain things to people. And I'm like impatient, and those little details they don't care to me, because I'm like, who cares if you get 4% or 5%? What does that matter? None of this stuff matters. And the numbers are always different in the end. Like, let's just do the investment, and then I'll tell you what the numbers will be. Because that's just kind of how I am. Daniel, though, on the other hand, he communicates how he should communicate. So that's what I've done. I've just delegated that responsibility off. I also have an assistant too that she deals with like problems, because I don't like dealing with problems. I like to keep my mood as high as possible. So she tries to deal with all the problems. Then if they become a actual important problem, then I have to deal with it.
Got it. And as far as your investor database, is it people all throughout the US, or is it focused in your region where you're at? How do you like, as far as the cultivation process?
I mean, most of the people closer to me trust me more, just they've seen me doing it a lot, but I am starting to get more and more investors from LinkedIn, and then just being associated and deal in other deals with other people too. I'm getting more of a reach, but most everyone's like there's people from California, and then it's almost all like Southeastern, and then where I'm from.
Oh, that's awesome. Did you hear he said LinkedIn? He's getting his investors from LinkedIn. LinkedIn is such a great platform to connect with.
Definitely.
Excellent networking platform for real estate professionals.
Yes, absolutely. Yes. Now let's discuss ground up development. With your background in construction, are you involved in ground up development of multifamily?
Yes.
Okay.
So currently we're doing 128 units. It's called the Blue on Lake Lorraine in Sioux Falls. And that Sioux Falls is one of the markets that could potentially be sort of like a Boise. Probably not as much in appreciation, but there's a lot of room for it. And it could potentially do something like that. But that's a really high-end A-class building right on a small little lake. It's more like a pond, but we don't have much water around there, so it's a differentiator. Then we're doing a 45-unit development in Brookings, which is 45 minutes north of Sioux Falls, kind of the same, very similar markets. We're a college town, but it's like the college town of the Sioux Falls. So it's kind of intertwined.
Oh, nice.
And that's okay. You syndicate those deals?
We syndicated the Blue, and that we posted that on LinkedIn quite a bit. But this other one in Brookings is actually a JV deal. So I get people, like I can be basically a consultant on the development. I'll handle all the design and get everything going and get the banks approved. Like I know how to talk to banks, and I know how to talk, so I can bring in these younger guys that want to actually do the work now. Then they're going to do all the work, put up the money for the down payment, and I basically sign on to the project and consult and make sure it's actually running. But with my background in construction, I can, make sure they're not overspending and all that, because that is really, really dangerous in development. The GC can kill you. It's so easy to just go over 10 or 20%.
For sure. Okay. And these are built to rent, like basically apartments or condos?
These are apartments. So nothing for sale. Build to rent is an excellent idea. So we did a build to sell community. And after we got done building to sell, we basically just kicked ourselves. We could have made 10 times the money if we'd have just held it for the 5-year period instead of selling as soon. By building a house and selling it is not profitable at all. You need to build the house, hold it, build the entire development out, and then if you start selling them off, it's huge windfalls. And that's kind of why these guys are doing these BTRs, because the appreciation makes it a no-brainer. They're going to make so much money on those houses if the appreciation keeps on going like it is.
Okay, nice. Great. Yeah. Now let's get your predictions for the market upcoming here, and obviously, what's happening with the real estate prices and the cap rates, and almost the free debt available currently. What is your prediction short term in the next year and long term next 5 years? Do you think the current trends will continue, or will the Fed increase interest rates and try to do a reset to the financial world, where how they did a reset in our lives?
I don't know if the Fed will try the reset. I think the reset comes from more collapsing of other currencies possibly, and people going into, I don't know. But I think the dollar is one of the last ones though. And that's the beauty of the dollar, of the American real estate. The American real estate is still like highly, highly sought after. Still very, very, it's cash flows compared to almost anywhere else in the world. just the whole system on real estate is really good. I only see real estate going up because it's one of the best investments. But I see something happening more around Bitcoin that makes stuff something's going to happen from that. I don't know if what the Fed can really do. I think they've already used all their tools. So, and I don't know if anyone wants to ever try what Jimmy Carter did again. So can they go that route? I don't know. It kind of seems like a Jimmy Carter type scene that we're going through, but who knows? So I don't really know what the interest rate is going to do. All I know is that I'm going to buy real estate, a lot of real estate within the next year. For surely another year, going to have massive appreciation. This year, the year over year appreciation, true appreciation is closer to like 20% right now. I think that kind of continues for the next foreseeable future, few years. They keep adding bill after bill, and it's not hurting us to print all this money. So why wouldn't they just keep doing it? All the constituents want free money. So the mindset and everything, I just think the rich are going to get richer, the poor are going to get poorer until something happens, and until the debt goes away. I think that if they pull the debt, that'd be the main thing. But I think maybe it goes to an equitable based society instead of a debt based society with Bitcoin. Possibly that's the only thing I could think of. But most of the money's in debt, though. If you look at all the economy, it's all in debt. So how can you go away from that? I don't know.
And then also with Omicron, the new variant of COVID, this the issue is that they got to keep printing money to keep the economy going, and I don't see any stopping that, and that's perfect for real estate because it's a great hedge against inflation.
Absolutely. Okay, now before we move on to our next segment of the show, please tell us, Dustin, what advice would you give to someone looking to start passively investing in real estate?
I would say to just do it, because it's like, 50,000, I can just put it in the stock market and then I can just pull it out whenever I want. Well, that's the beauty of real estate. You can't touch it. It's like it's gone.
Right.
It's like you don't have the money anymore. Now you have to hustle a little harder and go build up another 50,000. That $50,000 model is so awesome. And then all of a sudden they start paying. So I just got a check the other day for $345,000 on a close. And now it's like, okay, I got to buy some depreciation. So now I'm looking for more deals, so now it's easier for me because I have to buy them. And then it's always harder when you have to buy something. So I would just say, buy your first one. And then once those things starts flipping and cashing in, you're just going to be, I don't know. It's like a game changer when you get that check and you're like, nice. So I gave this guy the money. I didn't do anything. And he returned me a better return than I would have made had I bought a duplex down the street and did all the work.
Yeah, exactly. Oh, incredible advice. Okay, we're going to head on to our next segment of the show. It's called 10 Championship Rounds to Financial Freedom. So whatever comes top of mind, I'm going to go ahead and start asking some great questions. So who is the most influential person in your life?
Oh, dang. My mother at first, but then I'd have to say probably some author, maybe Marcus Aurelius.
All right. Okay. Now, what is the number one book you'd recommend?
Oh, there's so many. I can't even. I'd have to say the one thing that got me into self-development was when I read Ryan Holiday's The Obstacle is the Way, because it got me into reading Marcus Aurelius Meditations. But you can't. It's hard to understand meditations without Ryan Holiday giving you the little build-up information. But the Meditations book by Marcus Aurelius completely changed my whole way I looked at the world.
Okay.
Completely eliminated any type of victim mentality and made me realize that a victim never will get anywhere.
All right. Okay, that's really cool. Meditations is what it's called.
By Marcus Aurelius, yes.
Aurelius. Okay, awesome. Thanks for sharing that. If you had the opportunity to travel back in time, what advice would you give your younger self?
Scale immediately and learn and focus. So I did not know what scale meant. I thought scale meant doing as many building projects as possible. No, scale meant doing as many multifamily projects as possible. Put as many units in one building as possible. Do exactly what you love to do. Like, that's what I tell myself. Do what you love to do. What do you love to do? Who cares about any money? Just go and do that. Because I had to go and learn that money didn't matter, or that it didn't mean very much. I had to go and learn that by going and only working for money. And then I was like, okay, I have way more problems that are way bigger than money now that I have money. So I basically yeah, that's kind of where I'm at with that one.
All right. I'm curious. Okay, next question. What is the best investment you've ever made?
I flipped a piece of farmland when I was really young and made like a $300,000 profit from a $40,000 contract for deed in like 6 months roughly. And then I flipped that into a 1031 that into my first multifamily. But that was also the most stress I've ever been under in my life. And it was all fake. It wasn't even real stress.
Oh, really?
It was just it's just what society deems to be stress. And once you get your right, you're like, oh, that's not even stress. What's the worst that would have going to happen? You would have lost your 40 grand. Big deal.
Oh, wow. And yeah, okay. All right. Now I'm curious, what's the worst investment you've ever made and what lessons did you learn from it?
I bought another piece of farmland and lost $1,000. And what I learned from that was location.
Okay.
First piece of farmland was in a beautiful location. Second piece of farmland was in a much worse location than I understood. I thought it was still good because it was surrounded by farmland, but that wasn't the case.
All right. Okay. How much would you need in the bank to retire today? What's your number?
Well, there's no such thing because money isn't even that big of a deal to me anymore. As I think money's kind of fake. It seems maybe it's just this new printing era that we're in, but it's almost like when you quit worrying about money and you just go and do what you're good at, money just follows you.
Oh, nice.
So I don't, and I'm going to just constantly add value. So I'm not kind of like self-motivated enough that I'm already retired. Like I'm doing what I want to do.
Nice.
And I don't really, so I'm already retired and I only have maybe $1 million cash. I don't have that much cash though. I might not even have $1 million cash, but it's not about the cash. It's more about the cash flow for retirement. So
awesome.
I got plenty of cash flow. So it's not really fair to ask me, right? I'm not looking at that nest egg thinking I'm going to live off of it. So I don't even know what that answer would be.
Nice. I love your view on life. That's fantastic.
And you're probably more cash flow focused than net worth or how much cash kind of focus.
Yeah, incredible.
I'm definitely more net worth focused with cash flow than how much cash I have because cash sits there and does nothing. Recently since I've started doing more breakdown on the inflation. It's come out that we're actually looking more like 6 to 7% true inflation a year since like 2000, roughly 20 years of almost 6 to 7% inflation that has gone on unnoticed basically.
All right. People will learn a lot by listening to this, right? Their mindset will shift. Now, if you could have dinner with someone dead or alive, who would it be?
Steve Nash was my first one. But Kobe Bryant, I would pick Kobe Bryant now.
All right.
I mean, Jesus, I would pick Jesus Christ, but that's not really fair. I'm talking about normal humans. I'm going to say Kobe Bryant.
All right. All right. Now, if you weren't doing what you're doing today, what would you be doing now?
I would be teaching a mindset course of some sort, or some sort of spirituality type mindset course to help people to eliminate their suffering.
Incredible. All right. That's my favorite question. Book smarts or street smarts?
Street smarts. Everyone I know that has money, for the most part, is not that book smart.
Okay. Nice.
You do get the geniuses in there that are good at everything, but for the most part, it's all the other smarts that elevate people.
Awesome. Last question, Dustin. If you had $1 million cash and you had to make one investment today, what would it be?
I'd buy a chunk of, I don't know. I'd buy a chunk of the really, really good chunk of raw land somewhere. But that's not a very good investment unless you build on it. Raw land eats. So you never want to buy raw land unless you have a plan in place. So I would just put it in a really, really solid B class. I'd probably invest it in Phoenix right now. Honestly, I'd probably invest about $1 million and I just had to give it away. I'd invest with Zach Happenstall in Rise 48 in Phoenix.
Nice.
Oh, nice.
You send your videos with them.
Fantastic. Yeah, all right.
Great.
Bonkers. And I don't know if Phoenix is bonkers market. Hopefully that keeps up, but who knows?
Yes.
Yeah, definitely.
Awesome. Hey man, really appreciate you coming on today and giving your knowledge away to our viewers. But maybe you can let us know how people can get in touch with you.
Mailboxmoneyre.com is the website, and it has all of our portal information, and it has all our good videos on our YouTube link, and we have a LinkedIn link, and you can get our email there. Everything's there. Mailboxmoneyre.com.
Amazing.
Fantastic.
We'll share it in our show notes. Thank you again for being
100%.
here today.
Thanks for taking the time, Dustin. We really appreciate it.
Thank you guys. I appreciate it. You guys are great hosts.
Thank you.
Thank you.